Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the markets. Wall Street was closed, of course, on Monday for Independence Day, but we can look at Europe and see that markets were up across the board. Pretty much the same thing in Asia today. What's the story in the global markets?
Yes, the European shares gained momentum in afternoon trading on Monday, where the DAX, German DAX, was up about 0.1%, and other major indexes rising between 0.2 to 0.6%. Pretty much, there are quite big hopes of the economic recovery, and upbeat economic data is actually helping that. If you look at the PMI survey, it showed the Eurozone private sector activity grew by the most since June of 2006 as the economy continues to open up for the COVID-19 related restrictions. Also, there's a bit of a concern about the input cost because of the inflation numbers are coming through. And then there's a concern about the spreading of the Delta virus, the variant, and that is definitely causing some concerns for the global market. But nevertheless, most of the people are quite keen about the economic recovery going forward. The FTSE 100 also showed quite significant rise by 0.6%, and most of the other Asian market, as well as Korea and Taiwan, they were doing reasonably well in the past 2 days.
And the same goes for Korea today. Another gain for the KOSPI, actually at a record high now, back above 3,300 points, and earnings coming out this week from some major players. Tell us about the domestic market.
Yes, today the KOSPI was up by another 0.36% after rising 0.35% on Monday. And it's continued to show rising trend because we're quite optimistic about the earnings perspective of second quarter for Korean companies. If you look at the U.S. market, also it did show very strong numbers in terms of the adding 850,000 new jobs in June, clearly indicating that the consumption in U.S. would be most likely to pick up, and that would have positive implication for Korean exporters. And if you look at the earnings for Samsung Electronics and LG Electronics, they're all probably giving guidance on Wednesday, and most of these numbers would look quite likely to be very strong. And also, if you look at the overall consumer price indexes, they're rising as well. And there's some concern about the COVID-19, the variant cases, where the Korea have been suffering about 700 plus cases for the past 4 days. And there's a bit of a concern about the domestic consumption might not be as strong as people hope for. So that's why I think that market's rising, but not at a significant pace. But nevertheless, we did see the Korean won appreciating to below 1130. Foreign investors continue to be net buyer of the Korean market. They bought net of 223.7 billion won worth of Korean equities, while the retailers were the seller of 292.2 billion.
And a lot of eyes were on the next meeting of the oil-producing countries of OPEC plus, but that was actually canceled on Monday, which sent oil prices higher. And looking at U.S. prices, more than $75 a barrel now, we could be seeing a further rise, some saying above $100. What do you say about the oil situation, Mr. Yu?
Right. I mean, there's a continuation of concern about the supply side. But the reason why they canceled it is because they cannot agree about the reduction or these additional increases, which means that most of these oil producers are going to increase the productions going forward. Right now, we think that the oil prices were very strong due to keen and tight control about the supplies. Particularly if you look at the U.S. side, the rig counts that showed in the July second week, the total amount was only 376. The peak of the oil price in 2018, the rig count was 888, and also the 2014 it was 1609. So clearly, it's only 1/4 or 1/2 of what the production level by the U.S. On top of that, obviously, these OPEC plus, they're not really supplying as aggressively as they have done in the past. So clearly, it's not because of the supply. I'm sorry, the demand side, but it's more of a production and supply side that is keeping the oil prices to rise. So yes, I think that in the short term, if they continue to be keeping the supply tight, then prices might be showing rising trend in the short term. But I don't think that can be lasting because the demand seems to be still quite not as strong as we've seen in the past.
And finally, here in Korea, data show prices of food products, groceries, are up more than 10% from a year ago, more than 12%. In fact, that's the biggest on-year increase in 30 years. That'll have raised the price of dining out, too, of course. So tell us what's going on with the food aspect of consumer prices.
Right. If you look at a lot of the agricultural products, the prices were rising very rapidly in the first 5 months of this year. That obviously has affected the overall food prices, the agricultural prices to rise. For Korea, it was up by 10.4% because of the avian influenza and other factors, and the egg price, the egg inflations actually soared by 54.9%, and also other products like garlic was 48.7% rise, and also the red pepper powders 35% up. So all in all, these are actually affecting the dining out prices. That has risen by about 2.3%, which is one of the highest since the March of the 2019, right before the COVID-19. All in all, these prices rise are actually affecting negatively. But if you look at the agricultural prices in the recent month, the prices were coming down very rapidly. So we think that the overall price implication is not going to be long-lasting. But nevertheless, the inflation pressure is definitely there. And we do look at somewhere around 2 to 2.5% inflationary pressure for the whole year. If that's the case, then Bank of Korea might be thinking about raising interest rate before the end of the year.
Right, that would be above their target price for or target rate of inflation. So, Mr. Yu, we'll leave it there for today. Thanks so much for sharing your insights with us today, as always.
Thank you very much.